Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. Well, it's Saturday morning and the market has just closed, and I'm in a position to show you a triple in one trade deal. Earlier this week, I published this video, and a link to this video will be on the top right-hand side of your screens round about now. Please go and view it because it has details about our EA that helps you with the doubling of the accounts, and it also does all the calculations of the break-even stops and things like that, and it has all the free courses that we provide to help you do these type of deals. So I'm not going to repeat that information again in this video. And then I made another video. The previous video covered last Friday. This video covered from the 7th to the 9th, and the video I'm making right now will cover the period from the 10th to the 11th of January, which is the Thursday and Friday. So I'm trying to keep this a regular video series where you can regularly see double in a day trades. Now, we refer to them as double in a day trades as the majority of the trades risk 5% to make 100% return. But you'll see at beginner level, you only risk 2% to make 12%. At intermediate level, you risk 5% to make 50%. And then at double in a day level, you risk 5% to make 100%. But then at super advanced level, you risk 5% to make 200%. And that's what we're going to be looking at today. Plus, we'll have examples of all the other ways. So let's get straight into the trading. Again, a link to this video will be on the top right hand side, and will also contain a really good free course that I can highly recommend for you. It's a YouTube free course, so there's no costs involved. So one of the questions that came up in the last two videos is, but Alex, are these recreated trades that you just make up from the charts by looking at the charts? And no, they are actually traded trades. And on your screen, you can actually see the triple in a day trade. And I'll show you how I create the charts that you look at the video. If I do this while making the videos will just take too much time. So there are the 4 trades that tripled this account. And all I do is I actually just drag them onto the screen, and I'll just drag all 4 of them to show you how it's done. And there is the trade. There, the initial trade, the first top up, second top up, third top up, and there's the exit that generated 200% return. So that's how the actual trades get converted into the charts that I show you in the video. So I then obviously add a whole lot of bells and whistles to these charts to make it easier to understand. And what then happens is this is what you then eventually see. I show you how the analysis worked to do this particular deal. Okay, so let's go into the analysis for this particular deal. This deal was based on a channel trade that retested, in fact, the channel line, and because it was part of a really important support and resistance level, it was very likely to bounce there. What we call that is a confluence of support and resistance, and when you get that, the likelihood of a bounce is enhanced. And that's what, in fact, what happened. The bounce happened, and we topped up 3 times, and it hit the bottom of the channel, strangely enough. And that's the beauty of these channel type of trades. You can catch almost 100% of the move. You get in right at the top and you get out right at the bottom. Now, I hope you found this interesting. We're going to be looking at some more trades, but this one is the triple in a day trade, where you trade one trade and just top it up until you reach a point where you have tripled your account in one trade. Now, you can understand the emotions must run extremely high when you do these kind of trades, and that is why we use EAs. So we program the EA to automatically, with a pending order, enter that deal and do all that work for you and exit automatically, because the emotions within a trade of this nature run extremely high. Very few people can withstand the itch to cash the trade in, especially after it's already made 100% return, because your options then are, you're either going to make 200% return or nothing. You're going to break even. These trades, after the first top-up has happened, generate a break-even stop for all subsequent trades. So it becomes a risk-free deal, essentially, but it is still highly emotional. So there's our triple in a day trade. Let's go to the other levels that were traded over that period. I'm just going to give you two examples of each. So at beginner level, here's another example, and you can see a lot of commonality even between beginner level and super advanced level. Very similar concepts get used. So here we have again a channel. There was a turning point there, drew the channel. There was the expected bouncing point, but it also had a confluence between a horizontal a line, and that gave it a super strength for bouncing, and that's how that was entered. Now remember, this was only a 40 pip trade, only topped up once, and the account went from you risk 2% to make 12% on this particular trade. Now here's another beginner level. It's a 40 pip trade, risking 2% to make 12%. Again, a bounce off a very strong support and resistance level. Now this might not look like a bit of a jumble, but the true strength came from the candles to the left of the screen, which you cannot see, which made up the strength of that particular bouncing point. And there was the bounced, topped up once, and exited at the top. So those are the two beginner level ones. I'm going to show you the intermediate ones, and here's most probably a more understandable one, which is again a channel trade. There's the bounce once, bounce twice, bounce three times, bounce four, predictable 4 bounce, and then it would head for the 5, and which it did. And it also made up one of these very strong support and resistance levels. And I'll talk a bit about this later on, and you'll see some concepts that we use. But you can see again the concept of almost 100% of the trend is caught when you do channel trading. There was the entry, there was the top up, remember, it's only 2 top ups for the intermediate group, so it's 2 top ups, and it hit the target, which was conservative. So there's an example of an intermediate trade. 5% went to 50% on the intermediate level. I must just give you a bit more information about this. A strong support and resistance level. How do we determine it? And there's a little thing that not a lot of people know about, but it's the S trade. So in other words, if you just follow my cursor from here, it goes up, down, goes through that support, and comes back to the support. So that creates an S shape. And if you've got a lot of S shapes that do that at a particular level, like for instance there's the same thing, down, up again, and down. So it is testing, it's bouncing there often. So here's the big version, up, down, and tested there. Again, the bigger version could be that, and tested there. So that shape, you will see, I might not have pointed it out as clearly in previous videos, and I'm going to try and explain that one a little bit more in these videos. But that is an important shape to give strength to the support and resistance. These support and resistance, and that's why we have more confidence that these trades will bounce. That's the intermediate level. Here's another one, intermediate bounce, boom, boom, entered, topped up, and there we go. So now again, if we look at this, look at this, up, through, down, there you've got your S shape. Look here, smaller ones, S shape, S shape. And that's why this became a the retest there became one that would happen. Here's another S shape. They're just hundreds. Once you start seeing them, you'll identify them. Here's one, S shape. I think I pointed this one out before. So the S shape adds value to the support and resistance lines, and that's why you can actually count on bounces with a lot more confidence. So that's the intermediate one. Let's see if we've got some advanced ones. And here's an advanced one, again purely done on a support and resistance bounce, one that's been tested before. Again, here you've got this out in retest, out in retest, out in retest. So it happens over and over again, and that gives us confidence that this is likely to be a bouncing trend line. And this was a double in a day trade, risking 5% to make 100. It's a more advanced one. As you can see, there was no channel involved in that particular trade. The next trade, has got a channel involved, 1, 2, 3, 4. So we would expect a 5 bounce. Now again, the history behind this horizontal support and resistance is not clear on this chart. It's a 15-minute chart, but if you start looking at the hour and the 4-hour chart, you'll see how important this particular level was, and that is why we had a lot of confidence that there will be a bounce at that particular level. There was also a bit of a time of day. There was also a time of day issue here, which caused additional volatility. And what I would suggest you also do is, if you look at the past videos and this video again, please note the currencies that we are using, and also the time of day that these entries are made, and you'll start seeing some amazing patterns in that too. So I hope you found this video interesting, and I hope you found it educational, because that's what it's supposed to be. And also, if you do want to use that EA that we spoke about, the double in a day EA, the links will be supplied in the description of this video, because I wanted to focus purely on the educational aspect in this particular video. So from me, Alex Eploy, cheerio. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Eploy, cheerio.